Well, good morning, everyone. I want to welcome back Keith Murphy from Essex Mortgage. Good morning, Keith.
Good morning, everybody. Good morning, Kelly.
Hi. Hey, I wanted to talk to you a little bit this morning, if we could maybe do a little bit of a deeper dive into VA loans than we've done in the past. I know that when we get a VA buyer, there's a lot of questions that they have for you. There's a lot of questions that agents have, and there's clarity that needs to be brought to the table. So if you could, we had talked about maybe 10 things that have been consistently over time, things that you found that the veteran doesn't quite have an understanding of or have the knowledge about, which is of course understandable. So you being the VA loan expert, I know you've done hundreds of them. Let's just dive right in. What would be, do you think, the top question, maybe the top three? We'll start there.
Yes, for today, let's talk about the VA loan, which is the best loan in America for those that qualify for it. Here's an interesting fact for you, Kelly. 21 million active duty and retired service members, people who have served our country. Out of the 21 million eligible for the VA loan, only 6% have utilized it. 6% out of all the people that have it accessible to them. And that is probably the first thing to address, is a lot of veterans, for whatever reason, don't know that they have this eligibility, and or the lender that they've connected with doesn't offer a VA product, or the lender doesn't understand the VA loan product themselves. It's not something they do every day, and it's just much easier to default and direct the client to conventional loan, an FHA loan, a USDA loan, or the such. So just the awareness that if you've ever served our country or continue to serve our country right now, if you're in the National Guard, if you're a reservist, it doesn't matter. If you paid your dues to serve our country and our freedom, you may have the eligibility to secure this financing. And probably the very first thing that one needs to do if they're wondering, hey, maybe I'm eligible, where do I start, is you need to contact a lender and get your certificate of eligibility. If you can dig up a copy of your DD-214, which is your discharge paperwork if you have separated from service, or even if you're active duty and you have a current or recent LES, a leave and earnings statement, with those documents in hand, if you pass them to me, I can log into the VA portal, enter your information, and I can get back a yes or a no, typically within 72 hours, sometimes within the same day. The yes, and attaches your certificate of ability, or you don't qualify for these reasons. Typically that would be you didn't have enough service time during time of war or strife. So just looking into that is probably number one. Do you have that eligibility? Then from there, making sure that you understand that a VA loan isn't underwritten like a normal mortgage, which is why a lot of lenders shy away from them, insofar as it's a completely different set of underwriting guidelines. It's much more lenient, whether it's credit score or derogatory credit in the past. It's just much more forgiving. So it's the net, if you will, is opened up to a wider percentage of borrowers than, say, an FHA or conventional loan. So maybe you're a veteran, but you think, oh gosh, I had a car late payment a year ago, or gosh, we had a family illness and we lost a home to foreclosure 3 years ago. We never qualify for a VA loan. You need to look into it because, again, the guidelines are very relaxed. Probably the third thing is the actual loan itself. When I said in the beginning that it's the best loan in America, it's got a lower interest rate than any other mortgage you're going to be able to obtain. There is no PMI cost, so you're putting on a VA loan zero down, and I'll talk more about that in a second. You're putting zero down, and typically when you buy a house, if you're not putting down 20% and you're getting a conventional FHA, you're going to have some sort of private mortgage insurance protecting the lender in the event of a default On the VA loan, you do not have monthly mortgage insurance. You do have a VA funding fee, which could range from anywhere from 0.5% or 0.5% up to 3.3%, depending upon whether you're a first-time user or a recurring user. Bottom line is that the VA loan is all-encompassing the best financing terms that you're going to find. So if you think you might be eligible, that should be the first product that you explore. I think that was three things. But
to interrupt you real quick, you had mentioned before,
Yeah.
I think that VA funding fee can be added to the loan. So that's not something that that VA borrower has to come up with that money out of their pocket to close.
Correct. So let's talk about the VA funding fee in and of itself. It's a fee that doesn't go to the lender. Nobody's making profit off of it. It's rolled into the general insurance fund at the Department of Veterans Affairs, and it's basically a reserve pool of monies to help veterans that get in trouble in the future, whether they're, called to active duty and they're at war and they're not home working and they can't make their payments and they're falling behind, whether there's, a health crisis or loss of life, what have you. Bottom line is, if that loan goes into default, the Department of Veterans Affairs helps the lender with the costs that are going to be incurred. So that money goes into a bucket and it sits there, and it's only used when needed for veterans that get in trouble on their mortgages. But many veterans don't even have to pay the fee. So again, it is a percentage of the loan amount, and like you said, it is rolled into the loan. It's not paid out of pocket. You can, but typically it's just rolled into the loan. But a lot of veterans that are qualifiable, if they have a service-connected disability or receive some sort of compensation because of a disability, typically their VA funding fee is going to be waived. And I don't know what the percentages are, Kelly, but in my experience of my intake is between 10 to 15 new veteran applications a month. I would say pretty easily that 30-40% of them don't have a VA funding fee because of the service-connected disability or disability pay.
Great. Well, I think, we covered probably what would be the top three concerns, which is how you become eligible for that VA loan, and just some of the perks of the VA loan with regard to the lower credit scores and the lower interest rates, and of course zero down, and then of course the fact that there is no monthly mortgage insurance, and if there is a disability that veteran has, that funding fee will be waived. Even if there is a funding fee, it can be added to the loan, but there are many circumstances in which it's waived altogether. So I think those, I know there is so much more to this VA wheelhouse, and I know you're absolutely an expert at it because you and I have done those VA loans before together, and I absolutely love getting offers that are VA loans. I know typically those people are solid, and it's just a matter of making sure that they're good to go, that the lender has done their homework, and that the offer is structured properly. And I personally recommend those to my sellers all the time when they get those. Don't shy away from them. It's not as scary as it used to be. I know back in the 70s and 80s, it was a much longer process, but it's pretty streamlined. Go ahead.
So again, the talking points here, Kelly, for the VA loan are very numerous. And if anybody wants more information, they should connect with you. You can connect them with me so I can, educate even more. But I did want to close with something that's new for 2020, and it's most likely indefinite, and it's a very, very positive and good thing, and that is this. Prior to January 1st of this year, if you got a VA loan, just like if you got a conventional or FHA loan, you had to be within a county loan limits set by the Federal Housing Finance Authority. Make sure that you could still get that zero down. If the loan or purchase price rather was over the county loan limit, you had to come up with a percentage down. There was a formula that we would use to figure that out. We don't need to worry about that formula anymore because effective January 1st, 2020, there is no loan limits anywhere in California for the VA loan. So you could buy a $5 million home, put zero down, no mortgage insurance, and have an interest rate lower than Bill Gates or Warren Buffett could get on their own home financing because you served our country or currently serving our country. So definitely it's a product to look into. If you think you might qualify, you should inquire to find out what are the options and what is available to you, and not just be directed to a conventional loan or VA loan right out of the gate.
Right. That's great. Oh man, fantastic news, and fantastic news for our borrowers, because California does tend to, by and large, have home prices that exceed county loan limits. So if they're eligible and they can make the payment, that's great news.
Amen.
Yes. Well, thank you once again, Keith, for that wrap up, or for those details and that insight on VA loans. And I know that we're going to be covering more about VA loans in the future. And I appreciate you so much giving us your time today. Thanks, and have a great weekend.
Appreciate you having me on, Kelly. Thank you. Have a great Saturday. I know it's a busy day for both of us, so much success to you and your team, and look forward to wrapping with you next week.
Yes.